Welcome to the week ahead for the week starting Monday, the 11th of May. We're coming into it, of course, off the back of a period of strength for equity markets, weakness for energy markets, and some optimism around the potential for a deal between the US and Iran. Whether that's going to happen or not in terms of a deal, that remains to be seen. But certainly between Iran and the latest inflation data coming out of the US, we should be set for plenty of fireworks in the week ahead. And so we're kicking things off with the overview for the top tier events for the week coming, starting off on Monday the 11th with inflation out of China, existing home sales out of the US, then consumer confidence and business confidence out of Australia, ZEW economic sentiment from Germany, inflation out of the US from a CPI perspective, then PPI on Wednesday. And then from the UK, we've got GDP and retail sales from the US. So we're going to kick off with a look at the US, and certainly the most notable event is really on Tuesday with the inflation data coming out. And certainly there is a significant divergence playing out at the moment between headline and core inflation. And you can see that here. Headline expected to rise up to 3.6%. Core expected to remain at 2.6%. And so it's down to everyone to decide exactly what the Federal Reserve care about or not. If you look at the PPI figures, of course, we're talking about factory input pricing. The headline number expected to come down to 0.2. I would say there's a possibility of that coming in higher. And the core reading at 0.2 as well. Retail sales expected to come down a bit. We'll keep an eye out for the jobless claims and the weekly ADP payrolls figure and industrial production as well. Now, this is the outlook that we can see in terms of inflation. We've got two forms of core inflation here, the core PCE and the core CPI, alongside the latest monthly metric from a CPI perspective. And that highlights the fact that the resurgence in terms of inflation really is driven by energy right now. And therefore, if we do see a sharp upside move this time around, it's probably going to come from the headline figure rather than core. You can see that here last time around, headline at 0.9, this time around 0.5. Remember, energy is going to be measured against the previous month as well. So the month-on-month metric coming down somewhat, but still elevated, and that has the propensity to push the annual figure higher, as you can see here, 3.6%. We can see here, if you track the price of WTI and you overlay the monthly CPI metrics, you can see exactly what happens over time. And so generally, we get a good idea of exactly where inflation is going on the headline number as being driven by major moves in terms of the energy market. So you can see that oil has come off a little bit recently. That is a good thing if we want to see a bit of disinflation coming into play, but still elevated nonetheless. And so we can see that inflation does appear to be building and certainly will continue to build as long as we don't have a solution to the issue in the Straits of Hormuz. In terms of rate expectations, there's just indecision, quite frankly. I mean, if you look at the bottom of this chart, you can see, say, July of 2027. Okay, 55% chance attributed to us remaining at 350 to 375. But you look either side of it, it's almost a perfect bell curve. You've got 19%, 19%, then 2.8, 2.9. It's a very indecisive picture, to say the least. And so where we go from here is really going to be determined by what happens. I mean, do we see a resolution to this crisis? Do we not? And then oil prices move higher and higher and higher. Certainly, the prospect of a potential deal does provide the basis for downside, even without the deal, downside in terms of oil prices. And that's something that we have been seeing of late. Of course, there's got to be some sort of follow through on that as well. And soon enough, markets just start to see a escalation once again if we don't see that breakthrough. So we've seen plenty of twists and turns over the course of the past 2 months. And from an inflation perspective, this CPI report does provide the basis for us to be reminded of the damage that's being done and the inflationary effects of what's happening right now. If we jump onto the chart, this is the chart for euro dollar. And so we can see more recently, if we're looking at the potential for sort of dollar weakness, if we do see a breakthrough, that's playing out at the moment with this creation of higher highs and higher lows now. And so that signals a possibility of further upside to come for euro dollar, further downside in terms of the US dollar. And certainly we have, of course, seen plenty of strength for the US dollar, but then that was essentially reversed almost in its entirety. And we're now back to the area seen at the inception of this crisis. Of course, it was the beginning of March. And so if we see the inflation data coming out this week as being hot, that's the kind of thing that could overshadow the current dollar demise that we're seeing at the moment around the possibility of a deal. So at the moment, if there's a strong possibility of a deal and people still believe that, you're likely to see further dollar weakness. But around the report of the inflation numbers, that's where we see shifts in terms of expectations for the Fed. That's where we see movement in terms of, say, the 2-year yield. And so if it does come in particularly hot, then we could see a bit of a pullback coming into play. The caveat to that is it would just likely give us another potential higher low before the bulls come back into play. But really, we're likely to see volatility in both directions. So we could quite easily see an announcement even before this video gets uploaded to say that in actual fact, all bets are off and we're going back to the military conflict and the like. But certainly it does feel like Donald Trump has aborted the military side of things as things stand. Elsewhere, I just wanted to take a look at some of the other markets in play at the moment. The S&P 500, as you can see here, has been on an absolute rip since the lows that we saw back here. You can see we've gone all the way up 16% up to where we are at the moment. So it's a really strong market, and notably, it's a case of just expecting the more until we see something different. Notably, also, we have seen it outperforming and US markets outperforming in the face of volatility for some of these other markets. So there's a decoupling where we have previously seen US markets essentially inverted alongside gold, inverted to the price of crude. Now that's no longer the case, and we've seen that diversion in part thanks to the strength of the tech sector. So more of the same expected, particularly if we see a breakthrough, but certainly from the context of the inflation data, if we do see particularly elevated inflation and it starts to lift expectations of hikes from the Federal Reserve, which at the moment markets aren't pricing, then that's the kind of thing that could hamper sentiment somewhat. Then we want to take a look finally at the issue of Iran. Now, they're apparently considering a proposal that could see the war end. Trump's talking about it being over quickly. The proposal is apparently a 14-point memorandum of understanding that would end the war and set a framework for a detailed nuclear deal. It includes essentially committals, in terms of, or commitments in terms of uranium enrichment, the easing of sanctions, the release of billions of dollars in Iranian funds, lifting restrictions in the Strait of Hormuz. I mean, that's what markets care about. Then the moratorium lasting something like 12 to 15 years. And then you've got a 30-day negotiation period. Now, of course, the key thing here is if they strike this deal, everyone thinks that everything goes back to normal. But there's also talk of apparently the Iranians not necessarily just on day one reopening the Straits of Hormuz. That it's sort of a slow process. You might need to start clearing mines, and you might need to start approving which ships move through the region, things like that. And the slower that they sort of reopen the straits, the more they sort of maintain a position of authority within that 30-day negotiation period. And what happens at the end of that, if they then don't find an agreement, well, it might get closed again. So doesn't necessarily mean that everything's open, but certainly right now markets are really being driven by sentiment. And if we do see that announcement, then it's likely that we would see some downside for oil prices and strength in terms of the likes of equity markets, the likes of gold and silver. So we'll jump into those charts and show you those before we sort of close things out. So you can see in terms of Brent crude, here we go. So that's the daily, right? So the start of this war, we popped up sort of 120. We time and time again reached that level, and it's essentially been the top for this market. And now more recently, we have seen very sharp declines coming into play. Now, notably, when we get below that $100 mark, it generally doesn't last all that long. Between sort of $95 to $100 generally has been the bottom of this range that's dominated for much of the past 2 months. So there is a possibility that the optimism we're seeing at the moment is ill-founded, which has happened time and time again, and therefore soon enough we see the bulls back in play. But at the moment, certainly if you look at the short-term price action, the bears are certainly in charge. And then if you look at, say, price action on gold, and in actual fact, let's just gold up on this, so we'll be able to see exactly how it's playing out on the intraday basis. So gold is here, we'll invert it. So there you go. So if you're trading oil, you're basically trading gold right now as well. And so the lower that we see oil go, the lower inflation expectations move, and the higher that we see the likes of gold and silver. And we can see here, let's just get rid of these two other fibs. So we've come into this 50% fib, and this is something that I created a video earlier in the week talking about the notion that we have seemingly changed in the sort of approach and attitude in terms of price action around gold. So what started off as sharp declines and gradual regaining of ground, and then sharp decline, gradual regaining of ground, then started turning into a gradual decline. And that seemed to me to be very different in terms of sentiment. They pointed towards a possibility that this is maybe a bottom around here, and whether we enter a new phase where we just punch higher, or whether we enter a phase which is, maybe we come up to this, so it's an ABC style move, and then we consolidate within this range as we see the damage that's been done during this crisis, and they may 30 days later find that they close the straits again and things like that. So I'm not necessarily saying that we are just going to punch the new highs, but I do think there's a good chance that we've seen the worst of it. And certainly the fact that we've now broken up through this swing high at 46.60 does allude to that similar kind of notion. So the bulls are in charge at the moment, but like I said, the caveat is that this is trading as an inverse of what's happening with oil. So if we do see oil suddenly spike higher, we're going to see a move lower here in terms of gold. But certainly the move through 46.60 does give me greater confidence that we're going to see a move higher from here. And so keep an eye out for that. Look, it's very difficult to judge exactly what's going to happen from one day to the next when it comes to Iran. Quite frankly, I would say it's the one reliable thing is that every time that Trump says that they're about to end the war, they haven't ended the war. So I would take all of this with a pinch of salt. And sometimes when you've seen significant moves, like we've seen here, like we've seen in terms of Brent crude, you start getting into the realms of a zone that in the past has provided a bottom or a top, and you start to think, have we seen the entirety of this move up until the point where we actually need proof that this is going to be the end? Because soon enough it's not the end, and therefore you see the reversal of that move. So we need proof. I hope that's been useful. It's the end of earnings season, so that means we don't have to cover anything on this video from that perspective. The economic calendar, like I said, we've got a couple other things. Inflation out of China, GDP out of the UK, but certainly the US CPI numbers is going to be the main one. But really right now, everyone's being driven by sentiment around the Iran war, and sentiment's being driven, but for the most part, by Donald Trump and tweets from both sides of the conflict. So not necessarily easy, because they don't always speak the truth. They're trying to affect public opinion, and also trying to affect market pricing, particularly when it comes to Donald Trump. Anyway, like I said, that's it for today. Make sure to like, subscribe, and follow. My name is Josh Mahoney, Chief Market Analyst at Scope Markets. Have a great day. Good luck trading.